You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' music means it's time once again for what we hope is a rockin' show. Yep, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. I'm back in the studio, thankfully, trying to source out. There were clearly some audio issues while I was gone, and I'm trying to source out what's causing them now, because I could barely hear anybody while I'm talking and doing the show. So if I sound a little loud or weird, particularly to the live listeners, then I apologize. We're trying to get it sourced out here in the background. Hopefully, to you audio listeners after the fact on-demand podcast, it'll sound as good as usual, even though it shall be a challenge for me to decipher what the Rock Lobster and Uncle Mike are saying, because I could barely hear them. But we'll get to that. Speaking of my cohorts here, my partners in crime, who did an able job holding down the fort while I was abroad, let me bring them on. Let's start off with the lobster of all rocks, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. Let me see if I can hear you, sir.
You know what? Maine is in a deep freeze. Option Pit is launching its second fund, or actually Carmeline's launching its second fund. Tomorrow is the date it goes live. So the Greasy Meatball has been very busy with the kind of the other members of the Carmeline team. So it's big stuff for Option Pit launching their next fund with a pretty significant amount of money to get going too. So it's thrilling times over at Option Pit as we do some diversification type stuff.
Good. I'm sure you said something pretty fascinating, because I could barely hear any of it. So I'm sure it was good and fascinating and highly detailed and analytical. Uncle Mike, have you something similar to contribute, sir? Uncle Mike Tosaw from RCM Wealth Advisors.
I'll do my best. Happy to be here. We are not in a deep freeze in Chicago. Actually, my little mini ice rink on the river actually is melted right now. So 45 degrees here in the Chicago area, and beautiful, sunny, scenic St. Charles, Illinois. I guess that's my excitement, is that we're at 45 and you don't have your saliva freezing the second you walk out the door.
Indeed. I got to welcome back in the chat room. Thank you, Mr. or I should say Mrs. Options Queen. Hopefully you guys can hear us. Like I said, I can barely hear myself and these guys here. So I don't know. We got to figure out something going on here in the background here. But while we figure that out, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man says, this is the portion of the show we break down what was trading, what was moving, shaking, bit of a mixed bag to end the day here. The S&P pretty much unched. The Dow rally ho earlier off of Caterpillar, end of the day. Kind of the winner of the day, up about 0.5% from the major index perspective anyway. And the Qs taking a relaxing relaxing sojourn to the downside, off fractionally, 1/10% there. Not a heck of a lot. Net movement on the day, even though I said we had a little bit of action intraday. And all this Sturm und Drang, all this inability to choose which way they wanted to go today, let the VIX creeping up a little bit of up more than 1/10, actually about almost 0.15. Imagine that to the handle, but still firmly in the double digits, right around 1160 or so. So we shall see how that plays out for my prognostications and crystal ball tomorrow. Hopefully I'll be able to hear myself when we do that show to hear my old stuff. Of course, we got some earnings popping off after the bell. We'll get to those in a second. Before we do that, let me turn around to my cohorts, my partners in crime, while I do a little audio deduction here. Let's go with Uncle Mike. Let's start with you. What caught your eye in today's activity, sir?
Well, it seemed like an exciting road to nowhere. We open up pre-market. S&P futures are up at least 10 from what I recall, and we just come down right away. Markets were up, they're down. They were down a bunch, and then we kind of rallied into the close to end slightly up on the day, but kind of an exciting road to nowhere type of day in stocks. Over in the metal front, my beloved SLV was rallying all week, pulled back a little bit today, but we have rallied quite a bit recently. I'll be curious to see if that can continue. We have Mr. Draghi talking about a lower dollar, and so I think that kind of made it so that there was some motivation to get back into the metals. I'd really be, the dollar has been strong over the course of the last few years, and I'll be curious to see if that can continue to be the case. But if it's not, then I think I'd be a little bit bullish in the metals right now. So overall, not a whole lot to really report today in terms of market movement, but over the course of this week, next week, with earnings season going on as it is, a lot going on. So it should be an exciting show today.
One thing I'm a little curious about, what has really started the whole dollar collapse? Is it the trade talk? I still haven't quite figured that out. Like all of a sudden the Europeans are paying big interest rates. I'm still not figuring any of that out. So the whole world, is it the anti-Trump I'm going to sell dollars vote? I don't know. It's kind of it's an odd one. And I'm trying to think because, as kind of the vol watcher that I like to do, I always try to figure out why vol's trying to do what it is. So I think one of the reasons, like we talked about Monday, is there is a lot of just volatility is lifted all the way up as SPX just went flying. I don't know if it was a short squeeze, somebody with short calls has gotten squeezed. But VIX and vol overall, I think it's actually the vol is coming from kind of upside fear and not downside fear. The difference is downside fear in the VIX is 20 or 25 or something when everybody gets worried about it. Upside is, we keep rallying and the VIX stays in the 11-12 range because just the upside movement is so fierce. You have 40 handles in 2 days, and that kind of blows the straddle out of the water. So if you're short a straddle, that is. So I'm finding the action and volatility is really kind of primed for upside movement. So that's at least where I see that's coming from, where, the lift in VIX is coming from. And you thought we had a bit of a vol sell-off after that shutdown thing, but it was really short-lived, and vol lifted right back again. So I find it curious, to say the least. That's all I'm going to say there on that score. It's a very curious. It is a curious vol pattern that we have right now. So we'll see. We will see how, when, and where that continues out. But my thesis, at least now, is I think we should start seeing volatility subside a little bit as the big technology earnings come out. I'm wondering if the huge run up we've had in the Qs and a lot of tech and a lot of market cap has, kept vol kind of buoyant, a little bit higher. And there's no call sellers right now. And I think that helps VIX lift and keeps it high, and it might keep it high through this earnings cycle. And that's kind of what I'm looking for right now.
Well, I think it's unique when we're in a time right now where we have an 11.5 VIX and it feels high. I mean, I'm with you, Andrew. It feels high, but it's 11.5. Go in the last 10 years of your trading. Can you ever recall a time where you've looked at the VIX, seeing it print 11.5, and think, "Wow, vol's high right now"?
Yeah, exactly. You're like, "Wow, this feels high." So yeah. It is a symptom of our new, let's just call it the low vol market, where the volatility seems to be in the White House, but there's not as much volatility outside of the White House. I think maybe it's a giant volatility vacuum. The White House has purchased a giant volatility vacuum, and it just sucks it out of the market. Is that even fair to say on that?
maybe the Donald has a giant brokerage account to where whenever he knows he's about to tweet something, he's like, "All right, we're going to need some help here. Short a lot of VIX right now. I'm going to need some help."
I'm just going to pound it into the ground and see if it works. You know what? It sounds almost as good as the wasn't there the Kim Jong-il that every time he wants to launch a missile and he wants to make a few extra bucks, he buys some SPX puts and waits for it to happen.
That's one way to do it.
One thing though that I think there's a reason why the vol is, and it's you look at like Netflix, right? So Netflix had huge subscriber growth, everything is really hunky dory. The stock is let's just call it, it's not a cheap stock by any stretch of the imagination. Okay, it was 225 a couple days ago. Okay, traded right to 250. You had your nice 10% rally, and then it proceeded to rally another 10% 2 days later. So it's almost like nothing, when the animal spirits get behind some of these stocks, and I think that's a reason why we have some of the vol we have, is there's no top on these things. And for investors that own it, that's great. But if you're a vol trader, you can't be selling calls into this. So you're just going to give yourself all kinds of fits and problems. You're going to have real trouble. So that's where I see. That's where I see the vol, and let's see if we get any kind of real earnings dampening after. I figured maybe we could get a little bit after Intel reports, but probably not till some of the bigger. I mean, it's not like Intel's not big, but more of the cloud internet, like the Microsoft, Google, Amazon. See if we get any drawdown on the vol from that. So.
Well, you mentioned some earnings. We can get into that. Actually, before we do that really quickly, I just want to mention what I was off gallivanting at earlier this week. I went down, I'm not sure if you guys ever had a chance to head down to this one, but I went down to the big Inside ETFs conference there in near Fort Lauderdale, which is interesting. It's a huge conference. It's like 2,500, 3,000 attendees, something along those lines. They're pretty big, certainly bigger than most of the derivatives-oriented shows that I usually attend. And as the name implies, it's pretty much all about ETFs. So just about every flavor of ETF under the sun you could imagine was on display down there. If you want some sort of Brazilian coconut water ETF, it's there. This about as niche as it gets. It was down there. It was pretty impressive. I will say this. First off, I haven't heard the word beta so many times in a long time. Everyone was talking beta to me. We've got the best beta, smart beta, real beta, 1 1/4 beta, this beta, that beta. I never heard so much talk of beta in my life. The other was factors. Everyone's got factors on the brain, the different factors for your portfolio. Of course, they're all mentioned volatility. They're all mentioned income, things like that. When you go actually talk to them, say, hey, what about all the ETF options that trade out there, and what are your thoughts on those? And Insight, it was like I was speaking Swahili. It was pretty impressive from just a complete lack of options penetration perspective. Even the panels that were, there were a couple of them of the many dozens that would be options centric, like hedging tail risk and things like that. A couple of them, one of them mentioned VIX a few times and others, but pretty much there was no talking of, out of the money put spreads or anything along those lines. It was all about, portfolio diversification and kind of these very much old school ways that the underlying guys like to hedge with things. I even went around and talked to a lot of the providers down. That's one of the main reasons I went down there. Talked to people, say, hey, you're the big ETF provider, you're the issuer. You have a lot of options flow on your underlying. What do you think of that? So what are your thoughts on that? And a lot of them really didn't really seem to think much. It's kind of an interesting disconnect in 2018 that you could be a fairly sizable ETF issuer, have an ETF that trades a lot of volume, have an option on that ETF that trades a decent amount of volume. And with a handful of exceptions of firms that I talked to down there, most of them, when I would ask them their thoughts, they summed it up as that volume was less than an afterthought to them. They really didn't have any interest in analyzing or discussing or trying to find a way to drive more volume on their ETF. They see, and I understand a certain perspective of that. They get paid on the underlying. The option is a little bit more of a couple of steps before you get paid on that one as a accrete back into the underlying. But you'd think in 2018, a savvy firm would have knowledge that the two kind of go hand in hand, and volume in one would drive volume in the other, hedging and vice versa. And yet that didn't really seem to be the case. So it was a little bit of interesting, a little bit eye-opening perspective. I definitely got the feel watching this that maybe the ETF space has, shall we say, crested, maybe topped. They capped off the event with having Quincy Jones announce his new music ETF. So when Quincy Jones has an ETF, maybe is it fair to say that the market has topped? I don't know. But the hunger, the insatiable hunger for most of these passive ETFs. I mean, look at the numbers last year. How many hundreds of billions of dollars flowing just into passive ETFs that track the S&P or pick your index of choice. It's kind of hard to see why people aren't. It's not hard to see why people aren't that excited about super active things like options, because that takes work and knowledge and understanding. You can just ride the index, and that's a good thing. The problem is all these funds I looked at this week that are riding the index up and having a great time now, they're going to ride it right back down again. That's the scary thing. That's scary. I kind of have a similar feeling as when I first went to the big Morningstar Advisor Summit about 7 or 8 years ago now, and talked to all the funds there and realized that their options penetration, their options wherewithal was nascent. And you could amass hundreds of millions, billions of dollars in AUM and not even have the hedging expertise of a very basic, first week clerk on the exchange. So that was a little eye-opening to me. And I think this week was a similar event in that a lot of these funds out there just say buyer beware for a lot of these things. I understand the interest of them, but it's okay to trade these things as long as you have some sort of active component that probably you're doing yourself to do hedging and all the other things to talk about here on this show. So interesting show. We have some hits coming from it on their network, so stay tuned for those. I did some sit-downs while I was down there, kind of getting the lay of the ETF land, which is a different land, has its own rules of engagement, very different than the options. The intersection, not as big as perhaps I had hoped, but we'll see. We'll explore what we can, because clearly the ETF options trade. SPY clearly trades. In fact, we have a question about that a little bit later. You guys like your ETF, ETP type products, VXX options, Qs, GLD, pick your poison. There's a million of them out there, and they all trade all day. And yet it doesn't seem like a lot of people are really that interested in that, which is a fascinating thing to me in 2018. Speaking of things that are fascinating, let's move on to some active stuff that's going on right now, which is, of course, the earnings that Mr. Rock Lobster alluded to. It's been a crazy week. He just talked about Netflix, what a monster that was. Apparently, the news out of Netflix is that, hey, raising prices is good for business, because everyone was really concerned after they announced that price hike there. Okay, the salad days of Netflix are over, as they do every time there's a price hike there. And yet worked out pretty well. The stock closed on Monday right around a little bit north of 225, about 227.5. They were pricing in a little over $16, about 16.5, so a little over 7%. Stock opened up $27.5, up 12%. So you already did well there, and it got as high later this week as up to 272, up $45, so about 20%. So premium buying was the way, or maybe selective premium selling and get the hell out of the way of the earnings. That was the way to success in the good old Widowmaker. My old friend, my old stomping grounds, Intel, reporting after the bell. And I do like earnings season because it is nice to be able to sink our teeth into some actual tangible numbers for a change, as opposed to some debatable macro trend or the rumor of a nuke coming out of North Korea or something along those lines. These are actual concrete numbers. Looking at Intel, where did they close today? They closed about 45.30, off about 0.5%. In the after, and they're pricing in, shy of $2, about $1.80, so right around 4% for that strat. Looks like in the after hours they're moving almost 4%, up about 3 and little north of 3/4, almost 4%. So 47 and change on the upside. So Intel, I guess all this just shredding they've received for the various issues and malware that or I should say flaws that malware can exploit in their hardware. Apparently, they're recovering from some of that a little bit. We shall see. Again, it's just the first blush in the after hours. It's always subject to change. Also got our old friend S-Bucks reporting after the close here. Good old Starbucks. They closed right around 60.5. They were also off about 0.5% on the day today as well. And they were pricing in a little over $3, about $3.15, so right around 5.25%. And so far in the after hours, they're off about half that, off about 2.8%. Or so. So we shall see how these things are going. Speaking of going, Mr. Rock Lobster, either these two names, these sexy names in the pit chat these days, people trading them up?
The Netflix, one of our guys did pretty well with some flies in there after earnings. Nothing much in Starbucks, and Intel is kind of a pit chat favorite, just long tech holding. It's one of my CD type stocks where I just figure, Intel's not going to go to zero and it pays a dividend and it's better than owning bank deposits. So it's worked out a little better than that over the years. So I'm trying to look for something cheap again to start doing it, because Cisco, Intel, Microsoft, all those, when they were trading at a 9 PE, they're not there anymore. So I'm trying to look for something new. So anyway, but yes, for the most part, people are still mildly bullish on all that stuff. Starbucks, though, is not one that lights it up. It doesn't get the embers flowing as like the other two do.
Ha! All right. I can hear you now. I have sourced the problem, so I can hear everything you just said, which was nice, because I couldn't hear a thing you guys were saying earlier in the show, which makes it kind of hard to host. But I have sourced the problem, listeners. We are good to go, and we're good to go with our old friend, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome back to the funky portion of the show. Yes, it is time for the Odd Block. All things weird, wild, whimsical, and just downright fun here on the old show. Let's kick things off, well, as we always like to do, with our old friend, our partner in crime, the kind of mothership of weird options paper these days. Always a good place to start, of course. Way funky, far out of the money puts in our old friend Tesla. Let's see, talking, of course, Jan 2019 and Jan 2020 50, yes, 50 puts. What's going on with those? People trading them? People like them? Answer, yet again, is a resounding yes. 62 of the 50s hitting the tape today. OI 36,750 continues to just dominate the strike list out there in good old Tesla. As you move out a year, a little bit less popular today, only 13 of these $2.30 puts in Jan 2020 hitting the tape right now. Total, just a few under 7,000 already on this strike. So clearly, people have awakened to what exactly is going on. Then they decided, 2019 not long enough for my blood. I need to get out a little bit farther, all the way out to 2020, and they continue to do just that with, like I said, almost 7,000. On the tape. Let's move on to some names that were popping off today. Let's start with Newell Brands Inc., ticker symbol NWL. They had a great day today, off 20%, or about $6.50. This ticker symbol, I said NWL. This is the name that does about 6,000 contracts a day. They did today 57,000, so a little bit more than usual. And it was a ton of paper out here. Pretty much pick your strike. They had a lot of action. There were a ton. We'll just focus on one interesting little, Mr. Rock Lobster likes his line in the sands. We found one for him in the terms of these Feb 23 puts, so very near term. Not that far off the mark either. There's only about $1.80 out of the money puts right now. Someone coming in and blasting out these bad boys. A total of 13,570 for prices. A big block going up for about 10,000, hitting the bid for 50 cents. About a couple thousand more coming in a little bit later for 55 cents. A total, like we said, 13,000 and change hitting the bid today or right around there. Only 6 contracts open on this strike, so clearly it was opening paper. Let's pull up the chart. I haven't really looked in on our old friend Newell in a long time. And it's been an interesting year for a good old New Year. A year ago, they were trading, get ready for this, listeners, $47. And then, about July earnings is when it seems like things started going south for them. They got as high as 51 back around that time, and then slowly, actually, they got higher. They got up to 55 back in June. And then around July earnings, they kind of just, the other side of the coin, slowly dropping. Got down till about November. They got down to about, we're still higher than they are now, about $28. And then last week, they got clipped again. They were trading 32, about a week ago. And not even, just last session. And then today, like I mentioned, off 20%. I haven't pulled up the news on these bad boys to see what's been driving them down, but fascinating nonetheless. Mr. Rock Lobster, usually when we see a move like this, we see a print like this, we don't see people coming in and blasting out on the bid on puts. Usually it's the other side. Just people gobbling up puts to see what they can do and just getting as much short deltas as they can. What say you, sir? What's your first blush here on these? Or do you think maybe this is a funky execution and they were maybe scooping these bad boys? And then in which case I have to lift my hat off to them because that was a good print.
Yeah, well, you know what? This is one of those, Mark, where I am they're still paying like a 20-something cent dividend. I don't know. This smells kind of like an opportunity. I love finding ideas here.
That's why you love this show. I feel the whole Prime Meridian Fund is just my ideas from the show.
It's unbelievable. But I mean, don't they make like rubber pots and crap like that? Those little rubber bucket things. And what the heck is going? Nobody buys that stuff anymore. I'm just saying I'm a bit agog at the whole thing.
They own Rubbermaid and Graco and a bunch of weird stuff. Sharpie.
Yeah, you don't use Sharpies consumer brands anymore?
No one's buying Sharpies or baby carriages or Rubbermaid anymore. All that's done.
I mean, is the SEC going to climb in their grill? I mean, the earnings have been increasing, or the dividend payout has been increasing. I got to go figure what's going on with this thing, because this actually, no wonder why people are. I'm of the opinion of these are line in the sand puts. Somebody's like, I ain't going broke buying the rubber band company at 24.81, or what's the line of this? There's the 23 strike.
23. Yeah. So
somebody just decided
21 and change.
I'm letting fly.
The 22 and change. 50 cents. You know what they found out? They found out that Rubbermaid poisons all your food. That's what they found out.
I guess so. I mean, stock was $60 or something. So this looks very I'm looking at this and like, how much can I lose selling puts in here? I can't lose that much, can I? So
we'll keep you busy on this show.
Listeners, do not. I don't cavalierly do things, so I'm just looking at this like, what can I lose? It's going to go to zero. So, I mean, I got to go in my kitchen and see how many Rubbermaid little plastic thingies we have, because I figure if I've got some, somebody else has to have it.
Whatever you do, don't touch them or breathe the air around them, because they will kill you horribly.
Have they been chipotle'd? Maybe that's the problem.
They put salmonella. You store your chicken in the Rubbermaid, now it's got salmonella. There you go. That would crush the stock.
You can't escape it. So maybe Tosaw has something from the pickle capital of the world. Maybe they're not shipping pickles in plastic buckets anymore. I don't know. But it definitely to me looks like line in the sand, and somebody's like, okay, I'm a fund manager. I'll take 1 million shares at $23. All right, how can I get in trouble doing that? So that is from if we get back on the subject of the block, that's certainly what it looks like. I mean, the vol went skyrocketing. It looks like this has to be a pre-earnings announcement. So I'm going to do some digging. I actually wrote it on my list of names to watch. So it officially is on the radar.
There we go. We live to give trading ideas to the Prime Meridian Fund whenever it is launched these days. So yeah, these are on our radar as well. We made them down, of course, to be watched because they're very near term. Mr. Rock Lobster is probably going to be looking at them very closely shortly therein. Yeah, I will have to dig in to see what the news is because whatever it is, it must be interesting. All right, moving on to this is the odd block theme today is big moves in the stock. We're going over to MNKD Corporation, ticker symbol MNKD. If the other one was a little bit too rich for your blood, around $23, listeners, don't worry, we got you covered. This one coming in today, $3.80, up 41% on the day today. So this is another big mover and shaker. His name that does about 6,600 contracts a day. Today doing 44,000. Yes, 44,000. Just crazy town, listeners. Of that, about 4.5 to 1 calls over puts. Let's see what we had up here today. So yeah, volume was just crazy. People in a name like this going to be in love with some calls, and that's pretty much what we saw. Like I said, 4.5 to 1 calls over puts. We spotted one of them out here, but there you can kind of pick your month, pick your strike, pick your poison. There was action across the board in the calls with big chunk out there. Particularly in the Feb 4s, we saw a total of nearly 4,000 going up there on the day, about 3,897 to be precise, including a big block for about 2,200 going up for almost 13 cents. A little bit of funky price in there. Again, open interest, 1,900 and change. So opening paper, however you want to slice it. That was a good scoop at about 13 cents because these calls went up 50 cents at 70. Went out 50 cents at 70. So not a bad little rip here for good old MNKD. If you're not familiar with these guys, they're focused on the discovery and development of therapeutic products for diseases. So this is our cheapy biotech for the day. This is, let's see here. Let's look at the chart here. Gotta love the charts in biotechs because they're kind of all over the place. This one is the same thing. Opened the year last year, not that far off here, about $3.40. Spiked all the way to $6.30 back in October. Then kind of dropped back down to where it was trading. Hit 253. Hit 253, open today at 277. So it's been quite a run here for good old MNKD. Mr. Rock Lobster, big spike in the stock, a lot of love in the calls. Probably not too surprising. What's your take here on all this call love in MNKD?
You know, this is one where I think this company was started by a guy that's already founded a huge drug company, and I don't know if he's still alive or not or what the deal is with them, but this is the inhaled insulin thing. So I think it's one of those things that, you know, it was always going to be done. It was always going to work. And maybe now it's finally working. So, but somebody wants themselves some upside. I mean, hey, this is a market where things go up. So I'm not going to, it won't be surprising me and it's a theme that Tosaw and I were talking about. It's like, you know, with the market doing what it's doing, calls all of a sudden look pretty cheap. So, what the heck? Go get yourself some MNKD, so to speak.
Gotta love some MNKD. I even buried the lead here. Speaking of calls, almost 1,000 of the May 6 calls. Also trading, someone lifting the offer on these bad boys for a whopping 30 cents. So May 6th, a little optimistic, Mr. Rock Lobster. So if you thought the 4s were optimistic, you got some 6s backing those up here in May. So yeah, this one, I guess inhaled insulin for the win. And you know what else is something that's fun to do when things are winning on a day like Thursday? And we already went long with talking some earnings. So let's get Uncle Mike on here. I can tell he's chomping at the bit. So without further ado, let's do it. It's Thursday. It's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's Thursday. It's a time when Uncle Mike holds courts on all sorts, or court singular, however you want to choose to do it, on all sorts of options, topics. Uncle Mike, sir, what have you got in store for us today?
Well, a couple things. I just want to kind of give an update on what I'm doing in the aggressive SPY fund, which is a strategy that we're using. It's kind of become the out-of-the-money call buying fund, but it's obviously it's been doing well, but Out of the money call buying will not last forever. That is my prognostication for the day to day. But anyway, I did some stuff this week. We were along the March 275 call on SPY for a while, probably since December, I believe. And so got to the point to where we're probably around at 275. I decided I wanted to just take a little bit off the table. So I sold a 285 call. And then going into this past weekend, rolled the 285 call down to the 280 call. So coming into this week, we had the 275, 280 call spread on, essentially for a credit of $2. Now, with that being said, we still had roughly 15 deltas of upside per contract. And so that'll work for the time being if you're expecting the market not to move that much or even just stay the same, because we had theta on our side at that point. But decided to get out of that because, well, after all, the market always goes up. But by getting out of that, it's going to be more protective. This is a very unique time in that because options are so inexpensive right now, my opinion, is that it pays to take risk off the table and have out of the money calls because they're so cheap. It's really kind of a weird conundrum with which we're in right now. So anyway, long story short, on earlier this week, got out of the 275, 280 call spread and bought the 295 call for April. Bought it for 89 cents. And then the concept behind this is very simple. If the market goes a lot higher, then we'll obviously make money on this. And then if the market just goes way down, then what the heck, it cost 89 cents. And to give you an idea of the amount of leverage with which I'm using right now, because of the gains that we've been able to enjoy this year, that is taking up roughly 5% of the entire allocation towards this strategy. So granted, some people have their accounts mixed into different things, but let's say they were just doing this strategy, roughly probably 4 to 5% of their entire portfolio is in this call option. Now, markets went up the last couple days, or at least since Monday. And so Wednesday, what I decided to do was take advantage of this. So I was thinking about going vertical again, but what I ended up deciding to do is selling a 298 call in March. So I'm diagonal, but not very diagonal. And the reason is this, is that let's say, for example, that SPY were to just go right through 298 tomorrow. Well, obviously that would be a happy day, and there'd be a whole lot of grinning going on, mostly by me. I don't know if it's necessarily going to get that high that fast, but let's say it does. If that's the case, I'm fine giving up anything past 298 for the time being, because of the fact that we will still have a very handsome reward from the April 295 call. Now, let's say the market kind of chops around and stays the same, even for a week or two, I'll be able to get a little bit out of that 298 call for March. I'm hoping for maybe 15 to 20 cents in profit on that. And if that's the case, then, obviously I'm able to do stuff by mitigating the risk on the premium of the whopping 89 cents that I shelled out for this. And my hope for this trade is that this is closed out within a couple of weeks. If we either get a downturn in the market, or if implied volatility or time decay just come out of this 298 call. So what I'm doing right now is I am trying to use this, going back to the diagonal frame of mind, to mitigate some of the time decay risk on this. And so by doing that, we still have upside on the market, still have roughly 8 to 9 deltas on it at this point. But I'm doing this from the stance that we've had a phenomenal January so far, and I really don't want a winning month to turn into a losing month. In other words, there's a such thing as protecting your gains. And if we do have a pullback, it's not really going to hurt us that badly because of the fact that we have so much money that we've taken off the table from rolling up all the options and selling a diagonal spread or selling a more near-term call on it. Market goes higher, we'll still be a part of it, and we'll still make some pretty nice money on it. But if it stays the same or goes lower, which is at least my fear right now, it's always my fear. It's my fear every day, hence the reason I'm long-term bullish, short-term cautious, then we have something in place to where we are prepared. So the moral for the story today is that when you are ahead, it makes sense to take a few things off the table and not necessarily keep doubling your money or doubling your exposure. Oh, I got money. I got more money. This is house money. Let's play with more. I don't think that makes sense. I think in the concept or of being a risk manager or of just trying to stay in the game, that it makes sense to take things off the table and allow the market to do what it does. Best way to win, not to lose. That's my opinion in this business anyway. Back to you, Mark.
You like this, Uncle Mike. I was down at the conference this week, and I ran a bunch of advisors down there as well because they love to sling the ETFs for their clients. And I ran into one advisor who actually does use a little bit of options. And I was talking to him about what he does for his clients, and he seemed like he had been a little bit put off on options of late. And when I asked him, well, what are your clients, what are they coming to you right now? Are they nervous? He had said he had mostly kind of older retired clients. Are they nervous about these valuation levels? Are they asking to take some money off the table like you were just talking about? Or are they looking to want more? And he said, they all want more exposure right now. I'm trying to figure out a way to do that for them. So there you go. So you're talking about taking money off the table, you the bull of bulls, and this guy's retirees are coming to him saying, add me more exposure to the markets. That's got to end well, right?
I'm sure it's going to end well. Yeah. And I'll be honest with you, Mark, I've had a lot of phone calls like that from clients and from, even non-clients over the course of these last few weeks, just wanting more and more and more. They can't get enough of this market. But just be cautious. That's what I have to say about it.
And let's see what you guys have to say, because it's time for a little bit of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Can't tell you guys how much more fun it is to actually be able to hear the show when you're hosting it. It makes it so much easier to actually host and understand what the heck is going on. Now, let's see. I mentioned earlier I was down at the big Inside ETFs conference this week, so we thought our question of the week should have an ETF flavor, but we had to give it an options twist, of course. So we said, hey, since we're down at Inside ETFs this week, we thought we'd make our options question of the week all about ETF options. Very simple. What is your favorite ETF for, exchange traded product out there that an option, put that next to it, that you like to trade, gave you some of the big ones to choose from, or you can write in with your others. Of course, SPY, in fact, 25th anniversary of SPY this January. That was the big celebration down there at ETF conference. Who knew? 25 years ago, the ETF that started it all. Good old SPY. Actually made an interesting anecdote. One of the guys the father of SPY, saying the first year they had X amount of assets under management, and then it kind of dropped the second year. People weren't liking it. And then after that, it kind of slowly grew and took off and became the monstrosity, the juggernaut that it is today. But in the early days, people didn't really get what the heck SPY was all about. GLD, second choice for you guys. Number 3, VXX, or 4 other. People have written in. Some people said the Q. Some people said, one guy, I think it was Mark Brandt, writing in saying he's waiting for the big Bitcoin ETF to come out, which, by the way, they mentioned that at the conference as well. SEC has said no moss on the Bitcoin ETF applications until they figure it out some more. So I guess they're putting a moratorium on that. So all of you guys out there who are looking for the next big Bitcoin ETF, I'm not sure that even applies to the ones that have been filed for the futures or not. We shall see. But either way, it doesn't seem like we're going to have many of these coming down the pike from the SEC anytime soon. Let's go back around the horn. Mr. Rock Lobster, we'll start with you. Which of these 3 is your favorite, or do you have another choice? And then B, what do you think our audience is choosing? Again, that was SPY, GLD, VXX, or other.
I think as far as my favorite ETF of those would be VXX. I think the client, customer, or all the listeners are going to pick SPY, though. That's the one they probably. But VXX is the one that a lot of my clients derive a lot of pleasure out of VXX. So there you go. But I would throw QQQ into there. That's been my astounding. I just never thought it would do what it did, but I thought it would go up, but not like this. So I'm not complaining. So I like VXX on the list. I would throw QQQ though, because it's the easiest, cleanest way just to ride all those big technology juggernauts into the stratosphere, which I believe that's kind of where we are right now.
Yeah, we have quite a few write-ins for the Qs. You figure one index, one commodity, one volatility, give it a nice representative feel. You only get 4 choices out there, so of course you got to make them count. VXX, you knew that. I kind of had a feeling that would be your choice. After all, you do speak to a volatility-oriented clientele, shall we say. You like to have those webinars, VIX made hard. People love them. All right, Mr. Uncle Mike, I got a feeling I think I know which way. Actually, I'm down to between 2 for you, so I'm curious what you choose. What is your choice here? What is your choice, and what do you think our audience is choosing?
Well, of course I'm going to pick SPY. I'd say probably 90% of my life is spent looking at a screen that has SPY written on it in some way, shape, or form, I'm convinced. So for me, it's definitely SPY. The S&P 500, it comprises over 80% of all of U.S. business and commerce. So for me, if you want to have diversification, trade SPY. If you want to have diversification in your portfolio, own SPY. It's a very good product. I love it. There's other ways of doing it. Some other ones that I like to use if TD Ameritrade offers commission-free ETFs in some fashion. So for people that are just like sending money in monthly out of their paycheck or whatever, I like IVV, which is another index S&P 500 ETF. It's actually a lower. I believe it's slightly lower. It's very similar. I forget which is higher, which is lower, but the internal fees are very similar, but the reason that I'm drawn to it is because of the fact that it's a commission-free ETF, and it's a way with which people can send money and have it go to their retirement. And there's some other ETFs that we use for that as well, for the people that are doing monthly dollar cost averaging type of thing. I like GLD. I also like SLV. But I will have to say this, for my favorite ticker symbol for an ETF, I got to go with MOO, M-O-O.
Oh, there you go. Moo, a write-in for Uncle Mike for Moo. That is a good one here. I like Bale, Corn. There's a few of them out there that at least their tickers are appropriate for what it is that they actually do. Surprise, surprise, SPY winning our poll, 54%, crushing everyone else's faces. GLD and VXX tied for 2 with 17%. I thought for a second there you might go GLD, Uncle Mike, something different, even though I figured you were probably leaning towards SPY. 12% going other with all your write-ins, like I mentioned, the Qs and a bunch of others waiting for Bitcoin. Good stuff there. But speaking of Bitcoin, last week's question we asked you guys, hey, the futures were around 11,500 when we asked you. You said, hey, let's pretend options existed. If you traded them, how would you trade them? 1 month expirations, looking out a month. What do you guys want to do? Gave you 4 choices: buy the 5% call, buy the 5% put, sell that 5% covered call, or just short the future. It was pretty tight coming into the end. A lot of you guys voted, and 5% out of the money put winning. I'm guessing some of the system shocks we saw in crypto last week had a little bit to do with that. People were saying all that. How many people wrote into us last week? Man, if I only had a Bitcoin put, I'd be doing so good right now. So yeah, that probably had a little bit to do with winning, but ever so slightly. Even with all the shocks to the system last week, still the calls were still doing good. Number 2, 5% out of the money call. Can't kill the crypto bulls. 27% there. 25% saying forget it, I just want to short the future. And 16% saying they would sell that covered call. I thought maybe the covered call would do a little bit better, but because it was also the only choice for selling a put on our list, really. And yet it did not get as high as I thought. Interesting stuff. Speaking of interesting stuff, let's keep on rolling with what we're watching for the rest of the week. It is time. Tim's looking for all these questions here are lengthy. This guy's writing in about iron condors and stuff. We shall. Which of the Greeks is our favorite? These all take a while. So let's keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's kick off our Around the Block by checking in on our friends that we reported on earlier. The names popping off after the bell. Got a good old INTC and S-Bucks popping off today. And I said Intel pricing in a little bit shy of $2, $1.80, so right around 4%. And in the after hours, they were kind of in line with that. And actually, right now, they're up $1.75, so pretty much exactly in line. Another well-priced straddle. here in the maybe they're starting to figure out this game, the market makers out there. We shall see. Let's move on to good old S-Bucks. By the way, Intel was not on that Cowen list. They sent us some names I couldn't, or Netflix definitely was. I was looking for Netflix because they clearly blew the doors off. They weren't on that list of underpriced or overpriced names going into the straddle, so I don't know how their research factored on that one. I'll have to ask them. Good old S-Bucks, like I said, they're priced in about 3 and change, 315, a little over 5%, about 5.2%. And so far, a little bit shy of that in the after hours. They're off about 3.3% off, about 2 handles exactly here in the after hours. So interesting stuff. We got some earnings, though. Isn't that nice? Isn't that refreshing, guys, to be able to focus on earnings? Who do we have here popping off later on in the week? If I could find it, which some reason, here we go. Yes, we have a lot of names popping off the rest of this week. And, of course, next week we see the season kind of getting into higher gear. Let's see. Tomorrow we have, today we had Caterpillar before the open. That was a big one for the markets here as well. Mr. Rock Lobster, we'll start with you. What are you and some of the crazies in the pit chat? Which names are really resonating with you guys this week and maybe next week?
I think overall Qs, Vol Products.
Talking earnings, you give me Qs.
Well, I mean, you know what it is? I'm sorry about that. It's Microsoft. Until we just had Apple, Facebook, all the big Q stocks. Sorry, all the big. We're just looking for all of those earnings, and it feels like the market is expecting more upside out of these things. It's hard to believe, but that's what we're looking at. And so far, I mean, if Intel can make $1 a share now, then in a quarter, that's saying something. So, it's a little, starting to look at numbers now for a company like Intel, even though it's trading $45, I think all time high, it's only trading at what, like 10 times earnings, and it has $100 billion in cash. So I know this is a big earnings cycle in general, but it's not like this company is out of sight priced. So that's the story. I mean, can these tech companies, the way everybody's kind of gobbling technology, you got driverless cars and all this kind of stuff coming down the pike where they're just going to consume tons of technology and chips and bandwidth and crap. I don't know. I'm kind of still bullish on the whole thing because it's not stopping. So that's what I'm looking at. So yeah, all the big ones: Apple, Microsoft, Google. If they can keep those printing presses rolling.
Speaking of Microsoft, I was down at the conference this week, and crypto and blockchain were big topics. People were announcing blockchain ETFs down there. And I looked at some of these blockchain ETFs, see what they had in them, and go figure it was Microsoft and Amazon and a couple other big tech names were the lion's share of all the holdings in these quote-unquote blockchain ETFs. So there you go, listeners. If you want to craft your own blockchain ETF, pick up some Amazon and some Microsoft. Those are the 2 big ones I saw in most of them. There were a couple others popping up in there, and they were the lion's share of the holdings. So pick up a couple of those, and there you go. You got your own little blockchain basket. You don't need to go buy some ETF. Uncle Mike, same question for you, sir. What's on your radar this week and maybe into earnings the next week?
Yeah, just the same thing that Andrew had said. Wanted to see how things react to it, seeing if we can touch the 3,000 mark in the S&P 500. It is really not that far away when you think about it. Along with that, and then, of course, the big news, tickets for the big Def Leppard Journey Tour go on sale next week.
I heard Def Leppard just announced that their catalog is going to be available digitally for the first time. So they're finally coming into the 21st century. So I guess if that news excites you, listeners, then you too, as we rock out here at the end of the show, then you too can head to a concert hall and buy all their digital stuff and then go see them in person. That music, of course, listeners, means we're done. But before we go, back on the horn one last time, Mr. Rock Lobster mentioned they're getting all sorts of love for their forthcoming fund. Mr. Rock Lobster, regale us again. If we're interested in this fund, where should we go? What should we do?
Send me a note, Andrew@optionpit.com if you're interested. It basically is a long indexed hedged fund with sort of active management in it. So if you're interested in something like that, theta positive, so trying to grab some decay. So if you're interested in something like that, come and talk to us and we sit down and explain it to you. Take all about 20 seconds to figure that out. Also, my new vol newsletter will be coming out next week. So if you don't know how to trade the vol products, don't know how to trade volatility, it'll probably be the cheapest way to learn. Just follow along with the newsletter as things go on. There'll be entry, exit, just how I go about trading these, how I look at all this stuff, and trying to learn what edges in the vol market. That will be available through Option Pit, and those are our two biggies coming down the pike.
Check them out, optionpit.com. Option God, good show, guy. Whoa. Good listening to you there, Mr. Option God. Happy to be back. Happy to be able to hear it myself. So that made the second half of the show, at least for me, a lot more fun than the first half. All right, Mr. Uncle Mike, take us home, sir. What's cooking? Let's say, I like myself some skew, or perhaps I'm just fed up with all those dang ticket charges. Where should I go? What should I do?
If you hate ticket charges, give me a call. I am the Ticket Charge Relief Service Association, certified from the gold medal class of OP5. No, just kidding. If you do hate ticket charges, though, please give me a call. We have relationships with very large name brokers, and we don't have to pay ticket charges at RCM. And we'd like you to have that same privilege as well. Of course, we do charge a small fee for that, but most of the time the fee is much less than what ticket charges would be when you add it up throughout the year, and it's significant savings. Feel free to contact me. And also, if you do open up a new account, or if you're a new client with us, or if you become a new client with us, I'll even give you a $100 Option Pit gift card to spend on whatever you would like. Feel free to contact me at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
There you go. Take Uncle Mike's $100 and run with it, listeners. Go crazy. Maybe you too, you want to invest in the Prime Meridian Fund. Maybe you want to buy a blockchain, a basket ETF of your own. We shall see. Either way, hit him up, M2Saw, RCMFS.com. While you're at it, buy the man's book over there on Amazon at Tosaw. That's how you spell his last name. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing. It's fun to be in Lauderdale this time of year, but it's always better to be back talking to you guys. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.